Hey everyone, welcome back to our news trading session. And as per usual, this is going to be our non-farm payroll. So yeah, a lot to take in. I think we have already seen movement in the market. So it's going to be slightly different for tonight. Hopefully the audio is coming through okay, but if there's an issue, let me know, okay? Okay. All right, let me adjust this camera. Okay, seems to be good. All right, audio seems to be good on my side. Everything is good. All right, let's get started for tonight. And I'm just still getting used to the new camera angle here, so bear with me here. Okay, so we're gonna start with news trading session number 1. This is going to be a non-farm payroll. And it is going to be a unique one tonight. I'll discuss this. I'll discuss the fundamentals in a bit. But yeah, my name is Vidya Jero. Let's get this started with a quick disclaimer. Any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility, and market reaction to news can be swift and unpredictable, especially the unpredictable part for tonight, which leads to high trading risk and delays in order execution. So be very attentive when determining the volume of your transactions and consider all possible risk factors. All right. As per usual, some of you is already asking for the bonus and whatnot. There's going to be a promo code to double your deposit, and I'll give you the code soon. And you should already have access to the private Telegram channel if you registered through the website, and it should be there on your email. If you don't have that, please contact the customer service. Octa's customer service is super friendly. They'll provide you with the link as well to join the Telegram channel if you need it. Okay? Okay, so this is the code. It's Nonfarm 2024, valid until the 31st of December 2024. So make sure you are using this code when depositing into your Octa trading accounts. Okay. All right, gold. Yeah, we'll cover a lot of stuff. Trust me. And we are basically going to be looking for opportunities tonight. It is going to be a little bit unique because of the condition, and which is something we're going to cover on the theory session, which is going to be next Friday. Okay, so if you've never attended the theory session for news trading, you should attend next Friday, because then you'll understand what's what we're looking at for in terms of using the trading strategy. All right. So a little bit about myself. My name is Vidya Jero, and I've been a full-time trader with over 20 years of experience. I've been a professional trading coach and technical analyst since 2007. And in terms of trading coach, I'm actually a performance coach. So not just teaching people how to trade, but actually helping traders in terms of how they perform in their trades. So my expertise is in the Ichimoku Kinko Hyo technique, which is a Japanese charting techniques. And we already did some of this stuff here on the channel. Yeah, so if you're curious, just type in Japanese charting techniques or Ichimoku Kinko Hyo. It'll come up with the videos in the channel there. We've done a couple of webinars on the Ichimoku Kinko Hyo, so if you're very interested in that, feel free to have a look. Okay. Okay, so as per usual, we're gonna go through with the theories, and we're gonna cover what the BLS is, what's the NFP, what's the unemployment rate, what are we really looking at, and we'll cover some of the trading strategy that we typically use for the NFP. And I think tonight we're probably going to be leaning a little bit more on the fade rather than the straddle strategy. Okay, so just keep that in mind. All right, Aussie USD, yes. I think there's going to be a chance on Aussie USD. Okay, so let's start with the theory first. So what is the Bureau of Labor Statistics? BLS, Bureau of Labor Statistics, is a federal agency that collects, disseminates various data about the U.S. economy and the labor market. It also reports also include the Consumer Price Index, which is going to be released in 2 weeks' time. Yeah, it'll be on the 14th, exactly about 2 weeks' time from now. All right, as well as the PPI number, both of which are considered important measures on inflation. Definitely something to keep an eye out on as well. But we'll go through some of the fundamentals soon. All right, so within the labor market data, the most interesting aspects are the number of people employed outside agriculture, which is the non-farm payroll, as well as the unemployment rate. So at the very beginning of the year, the agency or the BLS publishes a calendar with release dates for the entire year. Okay, so unemployment data is actually published every Friday of the every first Friday of the month. But if it falls on a holiday, publication usually postponed to the following week. Typically within the year, what we see this postponed is typically to the second Friday of March. Yeah, just because February, in terms of the month, it is actually it's less than 30. But that's pretty much it. Apart from March, we typically get this on the first Friday of every month, okay? So inflation data, CPI is typically published on the following Wednesday, but for this one here, we have to wait for 2 weeks. It'll be a release on the 14th of July. So yeah, just keep that in mind. There are going to be changes here and there in terms of when the CPI release is going to be. But this month's CPI release is going to be mid-month, which is on the 14th of August, right? Not July. It's August. We are already in August. That's amazing how fast 2024 flies. All right. So what is the NFP number? The NFP basically is a report that's released monthly by the US Bureau of Labor Statistics that measures the number of jobs added or lost in the US economy, excluding farm-related jobs, private household employment, and non-profit organizations. So market analysts and investors usually look for NFP figures above 200,000. as it's seen as a positive sign of a healthy job market and a growing economy. However, the interpretation of the NFP data can vary depending on different economic factors and the context it is released in. So let me pause here for a little bit. Reading on the expectation for tonight, we're actually expecting 175,000. This is actually going to be below 200,000. This is also less than the previous months, which is 206,000. Okay, so just keep that in mind. We're looking at a little bit of a negative number. So, just to be prepared, kind of expect a little bit of a surprise to happen. Worst case scenario, a surprise could happen. It could ruin everything that the market has already been pricing in. So this is the unpredictable part of it. This is something that we need to consider, considering how the market has moved forward today. All right. Now, the NFP data is a crucial indicator of the state of the U.S. labor market and can significantly impact financial markets. Okay, very important, especially forex traders. Okay, figure that falls below market expectations may be viewed negatively, while one that exceeds expectations may be viewed positively. So let me talk about the numbers again. We're looking at 175,000. If we get something like 190,000, that's going to be viewed as a positive number. Whatever the market has priced in, it's probably wrong. And if we get a low number, let's say anywhere below 160, 150, that's going to be super negative for the dollar. So just keep that in mind, especially for tonight. It's straightforward, but in terms of how the market has been pricing in for a weaker U.S. economic number, in terms of how the market is aggressively again, anticipating that rate cut from the FOMC. A lot of pressures on the US dollar at this point in time. So yeah, negative numbers could actually mean the opposite. You probably heard of this when people say buy the rumor, sell the fact. If we do have that negative number, it might actually reverse a little bit. If we get a higher number, it could also reverse a little bit. So this is where I need to be a little bit more careful with you guys for tonight. We can't just place in a straddle and let everything run as it is. It is going to be a little bit different for tonight. All right. So again, very important figure. And in fact, every trader that started in the forex market, in terms of their experience to news trading, NFP is probably the first one that they're probably going to get attached to. Okay, a lot of traders are looking at these numbers, especially in the forex market. So, I would say this is probably one of the most volatile news releases. So be very careful. And a lot of beginners, when it comes to trading, they fall into that NFP trap. All right, so be very careful with the NFP number. It has its positive, it also has its negative as well. All right, so I'll just be a little bit more balanced on that one there. Okay, so according to the BLS, non-farm employee classifications account for approximately 80% of the U.S. business sectors, contributing to the GDP numbers. And again, the best assets to trade this are going to be the majors, anything with the US dollar in there. Euro USD, dollar yen, dollar Swiss, Aussie USD, New Zealand USD, dollar Canadian, pound USD as well as gold. Yeah, they do exhibit a high volatility, so we should expect quite a big movement. And I don't know if we're going to be looking at that, with how the recent range is on the Euro USD and the pound USD. But everything else, I think out there is still going to be a pretty volatile market. Okay. All right, next set of data is going to be the unemployment rate. So with the unemployment rate, it is calculated in percentage and it is published at the same time as the NFE numbers. And this is the other side of the coin, right? So the unemployment rate represents a proportion of the labor force that is currently not employed, but is capable of being employed. And the US unemployment rate is determined through a survey of approximately 60,000 households, right? Just 60,000. And I think we have about more than 1 billion in the US, but yeah, it's not a fair sampling, I'll just be honest with you. Right. So according to the US Bureau of Labor Statistics, or the BLS, for an individual to be classified as unemployed, they must meet the following criteria. They must be without a job. They must have actively looked for a job in the past 4 weeks, and they must be available to start a job if offered one. Now, if a person doesn't meet the criteria, they're not considered unemployed for the purpose of calculating the unemployment rate. Therefore, for you to actually be part of the sampling of the data, you kind of need to claim your unemployment benefits in the US, right? Otherwise, they're not going to have the record there. How would they know that you're actively looking for a job? You know, how would they offer you a job if you're not registered in the system? So that's kind of the logic behind that. And, you know, this is the reason why we have that weekly unemployment claims every Thursday. It is something that we keep an eye out for. I think for this month, yeah, it was released last night as well. Okay. Okay. Yeah, we will cover the technicals, don't worry. We're just going through the theory. So, you know, just bear with me while we go through the theories, okay? But yeah, any requests for whatever you guys want to cover, let me know in the chat right now. Otherwise, I'll do the select sampling of major currencies. But yeah, we got requests for gold, we got requests for Aussie USD. Anything else you guys want to request, better do it now before the news gets released, okay? All right, the third set of data is going to be the US average hourly earnings. And this data is also released by the BLS at the same time with the unemployment rate and the NFE numbers. And this measures the average hourly earnings of workers in the US economy. Data is collected through surveys of businesses across various industries and encompasses both full-time and part-time employees, including overtime earnings. Okay, very important because the sampling data for this one here is a lot bigger than the unemployment rate. Okay, in terms of whether or not it's actually going to be about the same sampling data as the NFE numbers, more or less, if you're part of the NFE sampling data, you'll probably, disclose your average hourly earnings as well. Okay. So economists, investors, traders closely monitor this report as it can offer valuable insight into the state of the US economy and its potential impact on inflation. So when trading based on the US average hourly earnings data, again, traders are going to be looking at the changes in the wage growth rate every month, and it can signal shifts in the labor market and potential inflationary pressures. Why? Because a higher than expected wage growth may indicate potential inflationary pressures, which can result in higher interest rates and currency appreciation. How is that going to be? If people are actually earning more, they're likely going to spend more. So if average hourly earnings continue to go up, and if it's not stable, then it is one of the early signs that inflation is still going to pick up. But for the past year or so, the average hourly earnings has been pretty stable. In terms of the monthly growth, it is only about 0.3, 0.4%. So it is pretty stable at this point in time. We're not expecting inflation to jump up anytime soon, but typically this is the set of data when a country is going through a high inflation. One of the first clues that they look into is the average hourly earnings. So average hourly earnings for this month, is it going to be important? I doubt it at this point in time. But unless it's a really a surprise to the upside, I doubt it will be much of an impact at this point in time. Okay, so we want this to be lower than expected because everyone is currently expecting a rate cut to happen. If that happens, then obviously currency depreciation is going to happen. The US dollar is going to get weaker. So that's the correlation that we have here. We're going to be looking for a number that's actually going to be lower than the previous month. Now, the average hourly earnings that we're expecting is 0.3. Previous month is 0.3. If we get 0.2%, then yeah, I think market is going to be aggressively pricing in for that rate cut for this year. For the financial year, I wouldn't say this year, but for the financial year, everyone is pricing in for 3 rate cuts. For 2024, I think in terms of time, I think some traders out there are still pricing in for 3 rate cuts. I think 2 is possible. We might actually get one in September. We're not going to get one in August. The next meeting is going to be in September, so we got about 6 weeks to go. Okay, so we'll see what happens here. Okay, cool. Aussie USD and my take on gold will do. Okay, we got, I'll give me about 10 more minutes because I need to go through some of the trading strategies here. So we can do a few things. Obviously, we can do the pre-NFP trading, and if you're doing the pre-NFP trading, that means you are trading this week, and you should be about to close your position right now to avoid the NFP volatility. Okay, so a potential strategy for this one here is to trade the market's anticipation of the NFP data release, which is everyone is expecting a lower number for the NFP number. And this is probably why you're looking at the gains in the Euro USD and the Pound USD. It has been gaining. It's not significant in terms of range or volatility, but it has been gaining. I think we are looking at a lot more pressure from the Japanese yen on the US dollar. That's really pushing down the dollar index. Okay, but if you're doing this, then obviously this approach involves opening positions in the days leading up to the NFP release. As I said, you're probably opening a position on Monday, Tuesday. You're currently either out of the market right now or looking to close your position in the next maybe 10 minutes. Okay, but if you're doing this, it is highly recommended that you close your positions before the actual NFP release to avoid the extreme volatility that can follow. So some people actually do this trade, before news. They're pricing in what's anticipated by the market. Okay, and then the second one is the straddle strategy. Involves placing 2 pending orders. Again, a buy stop and a sell stop. If you never attended the theory sessions, I highly recommend that you attend next Friday's session, because then it'll all make sense to you. There are some currencies that I'm actually looking to avoid to trade with the straddle strategy tonight. In particular, it's the Euro USD and the Pound USD. Okay, so just keep that in mind. So if you're doing this, what we do is we place an order above and below the market price. So that way you can potentially profit from a strong price movement in either direction, right? If it rapidly goes up, it kind of spikes up, your order get filled, and then you go to your merry ways. Or if it goes the other way, obviously you're open with a sell position. And the worst case scenario is that what happened with us for the past few trading sessions that we have was that whipsaw, which is something that we want to try and avoid, especially in gold for tonight. Okay, so anyway, once your order has been triggered, immediately cancel the other order to avoid being exposed to further market fluctuations. If we are late to closing our positions, we might trigger a buy, market could reverse, trigger a sell, and then all of a sudden you're hedged in between with a loss. That's the worst thing that could happen. Okay. Well, guidance on dollar yen. No worries on the dollar yen. Happy to talk about yen all day long. All right. So the third one is the fate that we are looking at. So this strategy involves waiting for the NFP release and observing the initial market reaction. Once the initial volatility subsides, we want to look at opportunities to trade against the initial move. It is a counter trend move. It is a little bit risky, but typically with the NFP numbers, what we get is one strong movement in one direction, and then short-term traders are going to be taking out their profits. We see that reversal happen. We see market kind of pull back, do that wild swings, and eventually the initial push that happened in the market is the correct direction. So the fate is basically, when people are actually going out of the positions, either their stop loss get triggered or their take profit got triggered. You want to take that reverse trade just for a short term, take that correction, because sometimes it creates that wild swings in the market and then it comes back to its normal range before the market. All right, that's what we are aiming for with the fate. Okay, so again, the idea here is based on what market often overreacts to the NFP data release, and a retracement or reversal is likely to follow immediately after the release is. Okay. if we can time the fade, it is a good trade because this is the trade with the smallest risk. It is a trade with the smallest risk with a high risk to reward ratio. So just keep that in mind. All right. Okay, I'm gonna pause here for a little bit because I do want to take some time to talk about the market. So I'm going to go to the chart here. And we're also going to be placing our positions here on the chart. Okay, so let me explain the Euro USD here. This one here is a little bit risky. And the reason for this is we don't have that corridor of volatility. We don't have that accumulation phase in the Euro USD. If you take a look at the movement on the Euro USD, it has been pushing up to the upside without any break, without any retracement. Now, are there going to be limits up here? We're close to that. We have 1.0850 as our limit at this point in time. Now, this is looking at the hourly time frame. Obviously, we do see a little bit of the market calming down a little bit. It is risky. And the reason is, if I were to open a position here, and this is just an example, do not take this trade. If I were to create a buy stop here, my sell stop is actually pretty far down. It is actually not very balanced at this point in time. It's not ideal. We don't have a movement in between. So I would consider this to be a very high risk to use a straddle strategy. And if you want to know more, please join in next week's session, which is on Friday, same time, when we talk about the theories and the logic behind why and how the straddle strategies work. Very risky. If you're doing this, it's going to be really risky. That's number one. The second thing is, if we take a look at the distance here, it's only about 25 pips. It is a very small range. So, you could do this. The problem that I have with this is if I place my buy stop here, it is about 1.0840. We have an immediate resistance at 1.0850, right? If we go into the hourly time frame, take a look at the high that happened here. We do have this as kind of our potential resistance. So I don't like this at all. And let me delete this before it actually gets triggered. So we're not going to be trading the Euro USD for tonight. I'll explain the logic behind this after the trade. We'll look at opportunities. But the Euro USD and the Pound USD, very risky at this point in time, especially it's just that we don't have that accumulation. All right, and price is continually pushing up. We might not get a proper buy stop. We might actually see, just market nudging up a little bit before data got released. It might trigger our buy stop, which is not something that we want. Okay, so I think this is the first time that we've done this in 2 years that I will not use the straddle strategy, not on the Euro USD and not on the Pound USD, just on the base that we just don't have that corridor of volatility. It is very risky and we don't want to do that, okay? Next is the dollar Japanese yen. Dollar Japanese yen, you can trade this, but just to give you a little bit of a picture on dollar Japanese yen, there's been a huge shift in terms of the monetary policy. We got a surprise rate hike. It's really not a surprise. It was like a day before. But we do have that rate hike from the Bank of Japan, and then the FOMC is expecting a rate cut. We are looking at some changes happening here. I'm just not looking at buyers coming in for the carry trades at this point in time. There's a huge carry trade unwinding that's been going on. Critical key levels 154.50 that was taken out, and everyone's just like backing off. Unwinding continues to happen. Price is now below 150. Yesterday, it made an attempt to go a little bit higher. I think it was capped out below 151. But yeah, right now it is at about 149. So I would be a little bit more careful on the dollar Japanese yen. We'll trade this differently, okay? So someone asked about the dollar Japanese yen. We will trade this carefully. I don't want to put a straddle on this one, because again, it doesn't make sense if we kind of put the straddle here. This might be in a positioning where it's actually forming a descending triangle, right? You guys can probably see that here happening right now. But yeah, be very careful with this one. It might actually form a descending triangle. So kind of pointless having a straddle strategy on this one here. Aussie USD, this one here, you can place a straddle trade. You can do it a buy stop at about 65.28. Or 65.30 if you want to go a little bit higher. It's just about 2 pips. 65.30 is good. And for the sell stop, it's going to be below 65, right? I'm probably going to put it at 49.90, 64.95, right? Yeah, maybe a little bit too far down. Yeah, about 64.95. It makes sense, right? All right, just about there, 64.95. Give it a little bit more room. But for the Aussie USD, you can do the straddle strategy. At least on this one here, we do have that range of volatility, corridor of volatility happening. Right, gold. Again, very risky if you do the straddle on gold at this point in time. Gold has been pushing up higher, but it's not gaining a lot, right? Especially with everyone, expecting FOMC to start cutting interest rates. It should have gained a lot more. Sorry, it should have gained a lot more. All right, it is pushing all-time highs again, and every time it push in all-time high, we should expect a little bit of a retracement happening. At least on the hourly time frame. Sorry, we're not pushing all-time high as of yet. I think we still have the 8th of July high on that one there. But yeah, I mean, right now, if you take a look at the hourly time frame, your buy stop, it's going to be so high up. It's at about 24.72. Your sell stop, if we go on the hourly time frame, it's actually going to be really far at 24.27. Huge gap, all right? It doesn't make sense if we do the straddle there. And if I go into the, let me just cancel this. If I go into the 50-minute time frame, you can take a look at this one here. We do not have the corridor volatility happening on gold at this point in time. So again, just talking about risk and whatnot, this is going to be a risky trade if we do the straddle. It doesn't make sense. It doesn't click. So it's best to just wait for the data. We process the data, and we'll see how it is. Okay. Aussie USD up, yeah, down, sir. Up or down? Is that what you're saying? It can be either both ways. So the Aussie USD, we can straddle the Aussie USD. The New zealand USD, you can straddle the New Zealand USD as well. Okay, so you got your buy stop at about 59.65. You're right. Your sell stop is going to be about 59.40. All right, that's it. These are the only 4 trades that we have, unfortunately, for tonight. Everything else, dollar Swiss, we can't trade it. It's trending now. We don't have that corridor of volatility. So with the straddle for tonight, we've got Aussie USD. Data's going to get released anytime soon. And yeah, as I said, this is going to be a little bit more on the unique side. Again, data, we're expecting 175. Data is going to come in anytime soon. And once we process the data, we'll take a look at the data, and then we'll take a look at the Euro USD, Pound USD, dollar, yen, gold, right? Once we have the data, we'll trade after the news for tonight. It's a little bit different. The risk is just too high if we kind of force our straddle strategy in a market where it doesn't create that corridor of volatility. Okay? Okay. So focus, Aussie USD, New Zealand USD, these two are going to be our main focus for tonight. Everything else, I'll wait. No rush on those. Okay, Aussie USD and New Zealand USD is going to be the main focus for tonight. So, all right, Aussie USD buy stop 65.30. New Zealand USD buy stop. Yeah, we got the buy stop triggered for Aussie New Zealand. Yep, and done. We're going to close out, and I'll wait for a little bit. I'll go a little bit higher in terms of target. About 65.70 for Aussie USD, New Zealand USD. We can start moving. I'll cancel this one, right? We'll wait for a little bit. Have our stop loss here at the lower end here, just in case, right? Always have that. For tonight, we actually have a little bit more room to go on this one here. So yeah, we'll see what happens. All right, data, 114,000. It's super bad. Unemployment rate, also super bad. It went up to 4.3% from 4.1%. Average hourly earnings also went down from 0.3% to 0.2%. Previous month's number was revised down from 201,000 to 180,000. All right, so let's see what's happening here. It's kind of a little bit of a pause here. Euro USD, Pound USD is screaming to the upside. Gold should be, but again, be very careful. We don't know what's going on. Dollar Japanese yen being pushed a lot. This one here breaks that descending triangle that we have on the dollar Japanese yen. I will not attempt to buy the dollar Japanese yen. We'll see if we can get a fade, but it's such a huge risk to fade the dollar Japanese yen. I really do not want to trade. I would really do not want to fade the dollar Japanese yen. Okay, Euro USD, Pound USD. We can come back to this. Let me pull out my chart proper, and we'll see what happens here. Euro USD, we do have a anticipated move towards 1.09. So if you're trading this on an intraday scale, if you're trading on the breakout here, you can target 1.09 if you want to. Your stop loss should be at best about 1.0825. But I'll wait for a little bit. I'll wait for the market to calm down. And I want to see if price is actually able to maintain a position above 1.0850. Why is the euro looking stronger? I think everyone's just frustrated with the euro, I'll be honest with you. But range-wise, is it that huge? It's only about 40 pips for the spike there. All right, we should be looking at a little bit of a fade, at least on the Euro USD and the Pound USD. The number is so bad. I'm trying to figure out what's the sentiment here. Unemployment rate, a huge surprise, up 4.3%. NFP numbers, this is super low, right? I think in my time of trading, a number that approaches 100,000, it's very rare. I think this is probably the 5th or 6th time that I've actually noticed a number this low. I've seen 98, but this is 114,000. But we'll see. Fade is happening right now, but we're not going to be able to take the trade as it is right now at this point in time. If you try to fade this one here, I would fade it if price comes back down below 1.0850. All right, we'll wait on the 15-minute time frame if you want to. Pound USD as well. This one here is being resisted a little bit. We've got a little bit of a fib. I think it's stuck at about 61.8. Yeah, about there. So we got 1.28 as our key level to watch out for on the Pound USD. That's the level the market needs to break for it to continue to push up. Now, should we trade this or not? If we trade this now, our stop loss, it's actually not, it is bad. It is about 60 pips because the closest stop loss that we have, very close to 1.27, which is basing that on the hourly time frame. I'll let this one settle down a little bit. Euro USD as well, if we buy it now, our stop loss is going to be very close to the low. Yeah. Very, very close to about 1.0790. It's probably not ideal, Can we fade this? If you want to try to fade the trade, I want it to at least fail at 1.0850. It gives me a little bit more of a confirmation. Why? It didn't manage to hit 1.09 on this run here. Very close to it, but didn't hit that. Well, so 1.0850 is going to be the main focus that we have here. Pound USD, 1.28. If it's not able to go past 1.28, then I don't know. All right. So buy the rumor, sell the fact. That's one. I think there's a little bit of the market should be pricing in for a much weaker US dollar at this point in time. But with the number that low, I think what we're looking at the market here is probably a huge risk aversion that's actually happening. Okay, so this is not without logic, and I'm going to explain to you on this one here. So the NFP is 114,000, way lower than 175,000 expected. Last month's number was 205. It was revised down to 179,000. This is one of the lower numbers in terms of the NFP gain. Okay, and the unemployment rate is definitely the surprise there. It went up by 0.2% to 4.3%. So the ideal scenario here is that I logically wouldn't want to go long the US dollar. However, the initial reaction to what it is and how the stock market has been crashing last night, if you didn't know, the JP225 or the Japanese Nikkei market, in terms of how far it actually went down today, it is nearly at about the same level as the Black Friday in 1987, which is a huge stock market crash. All right, so this is something that we need to take a look at. So at the same time, we're probably going to be looking at safe haven, a run to safe haven. So US dollar could be impacted by that. The dollar Japanese yen could be impacted by that, right? So we're looking at yen getting stronger. Aussie USD is pretty flat at this point in time. It didn't move much at all. So yeah, I think in terms of having the stop loss here for the Aussie USD, we're probably going to move it a little bit lower to about 64.75, right? just a little bit lower than that low there on the Aussie USD. New Zealand USD, I would adjust this as well to, no, I'm happy with that. I would rather New Zealand USD get taken out rather than being dragged down a little bit lower. Now Euro USD really pushing up higher. Pound USD is getting smashed. I think the Euro Pound is really strong at this point in time. Gold here, it is a run to the upside, you know, but it makes sense on gold. At the very least, it makes sense. I think people are going to be looking at a safe haven asset at this point in time. I think there's going to be a huge risk aversion tonight. So be very mindful. If you're trading the stock market tonight, we could expect a potential huge drop on the stock market. US 30 Nasdaq 100, I think we're already looking at that crashing down a little bit. Nvidia, if you're interested, we're eyeing 100. We might actually get 100 tonight. Okay, just a little bit of a hint. All right, so Euro USD and Pound USD, I think this is the two trade that we might take as prices coming down here. You know, we passed the initial spike. You know, let's wait for, what time is it now? 37. Wow, it's only been 7 minutes. So we'll wait. We'll wait. Look at that wick over there, right? All happening in 5 minutes. I think we might actually see a little bit of a push lower on this one here. But it is going to be limited at this point in time. The spike is just way too high. If we had a buy stop just now, you know what could happen? We would buy at the very top. We got smacked down. So we're going to be a little bit smarter today. We'll wait for price to come back down a little bit. I don't know what the wick is going to be, but I need to be a little bit more on the patient side. Now take a look at where it is right now. It is basically within range before news get released anyway, all right? Notice that? It just comes back to the range. Now, we don't have the corridor of volatility, and this is why I say there's going to be a huge risk if you take the straddle. It might get snapped and the market just reverse on itself. We wouldn't take the fade as well tonight, and the reason why we don't want to take the fade as well, we just don't have the time to fade this. Every movement that we see here happens within the first 5 minutes. That fade, it's going to be super risky with a number like this. We don't know what the sentiment is. We don't know what the market reaction is. So, you know, oftentimes, you know, not oftentimes, but sometimes being on the sideline is also a position that we can take. We don't have to buy and sell, right? I would rather be safe than sorry. Okay, so, you know, with all our trading sessions, it's not all about just opening a random position and, yeah, let's go for it, right? No, we have to look at the context of the whole thing, understanding the data, you know, what's the risk involved, and you know, I wouldn't be caught with the Euro USD and a Pound USD as our trade for tonight, right? At least on the on the Aussie and the New Zealand, it's not much, right? I mean, on the New Zealand side of things, it's only about 30 pips. Aussie side is only about 40 pips. It's not a huge deal at all, okay? But Euro USD, we'll wait, we'll see. I prefer to buy. My opinion on this, I prefer to buy. We got price staying above 1.0850. I don't like the 5 minutes. I'll wait on 50 minutes time frame. Now, if I were to look at, you know, the changes that's happening on the Euro USD and Pound USD, let's go on to the 5 minutes time frame. And yeah, I think this is still prime for an uptrend. We're just not getting a possible entry on this one here. Euro USD on the 1 minute time frame. If you want to take that, you might take that short bounce off 1.0850, but get in, get out. And you know, you guys can get in right now, have a stop loss at 1.0850 if you want to on the Euro USD, but get out at 1.0860, 1.0870. That's completely fine. But on the 5 minute time frame, we're not getting an entry at all. EMAs just doesn't have the time to cross over at all. Positioning for this one here, I like to buy Euro USD. Okay, I much prefer to buy Euro USD rather than selling Euro USD. I do not want to short this. And yeah, we'll see what happens here. Let's sentiment clear out. We'll wait for the next 5 minutes and we'll find a trade. Okay. Market still on risk off sentiments from last week. Yes, it's going to be worse. This number is so bad, right? I think recession fears could actually start coming into the market today. If you're trading the stock market, I want you to be very careful. Okay, be very careful with the stock market. If the risk sentiment is like this, the data is bad. A bad data like this doesn't help with the view that the rate cut is going to happen. That's already been priced in. This is so bad. The unemployment rate keeps jumping up by 0.2% every month. It's not a good number. All right, we had 3.9 to 4.1%, and then we got 4.3%. It's just not good. That means market could now start thinking the FOMC has made a mistake. They didn't cut rates too early. Okay, so they're now behind the bar. They're now behind the curve. Okay, be very careful. This could be a sentiment that's going to play out in the market. Just be mindful of that. Okay, Euro USD, 4 more minutes to go. This one stays about 1.0850. I would actually take this more as a longer term positioning on this one here. If we can view the Euro USD, all right. So let me show you what Euro USD is on the daily time frame, and I would actually take that opportunity today and use this as a swing trade rather than anything else. Okay, if it stays above 1.0850, we might actually see a reversal that's probably strong enough to be sustained. All right, but obviously we still have a cap of 1.09, so be very careful of that. But we had a transition above the Ichimoku cloud and whatnot. We'll see what happens here. Okay. So Euro USD, if we take it, it'll be for a swing. It will not be an intraday trade. If it doesn't suit you, do not take the Euro USD as your trade for today. Now for the Pound USD, we just transitioned above the Ichimoku cloud on the 15-minute time frame. But if we take a look at the potential momentum here, it might actually be a little bit on the downside. We have the resistance at 1.28, and the fib here, you can measure that. This is going to be the same fib on the hourly time frame, right? We have that rejection at 61.8%. Hourly time frame still below the Ichimoku cloud, way below the Ichimoku cloud. Euro USD, Pound USD on the 15-minute time frame, we just transitioned above the cloud. We can trade this, all right? I'm okay with this one here because we probably have a close above 23.6%. So I want this to actually come a little bit lower, all right? I want this to be as close as possible to 1.2750. That's the more ideal price for pound. And if that happens, then I'll probably have about 50 pips of stop loss. I'll have my stop loss below 1.27. Okay. All right. Sterling yen. No brainer on yen crosses. Do not go against the Japanese yen at this point in time. As simple as that, right? If you're the brave guy, if you're brave enough to do it, you try to fade on this one here. It'll just destroy your account. Trust me on this one here. Okay. Because I was in this position 3 weeks ago, post-intervention. I was looking for opportunities to buy back in. Got slapped by the market. So be very careful with the Dow Japanese at this point in time. Bank of Japan is very hawkish. Okay? FOMC at this point in time is very dovish. And the data we just got, it's super bad for the US economy. You have to put that into perspective. So I will not go against the yen. I won't buy the dollar Japanese yen. I will not buy the sterling yen. I will not buy the euro yen. If you're looking for a trade in the yen crosses, wait for a pullback. All right. How's the pullback? This is obviously going to be the problem because this is the dollar yen. I'll just bring it on the sterling yen. Now on the sterling yen, obviously we lost 191. No arguments there. We lost 191. Simple as that. And for today, it has been resisted at 191. Now, if you take a look at the hourly time frame, I am unable to provide an extension on the hourly time frame. In fact, I have to go onto a higher time frame. Even on the 4-hourly time frame, you're not able to create an extension on the 4-hourly time frame. Now, measure this on the daily time frame, and your extension is actually going to be here to there. We already passed beyond 161.8. So we are in a level where it's actually going to be really hard to figure out where the sterling yen is actually going to find support. The next available support that we have here on the sterling yen is at 185.50. 185.50. That's about 3 yen away. And that's the closest one that we can get that's observable on the daily time frame. On the hourly time frame, forget about it. You're not able to even look at that, right? We're way past the main number. We're lower than the main intervention. We just don't have that. We're probably going to be looking way back to about March, even lower than that, about February. So we're looking at that February support 185.50. We might have a little bit of support at 188. Sorry, resistance at 188. I think we just broke 188. All right. So we lost all the support that we have on the sterling yen at this point in time. So let me zoom in a little bit. Let's see if I can bring this back to view. All right, 15 minutes is closed. Let's go back onto how's our trade doing? Oh, we're still there. All right, Euro USD. As I said, I will buy. I will buy this, and for the reason for this one here, I think we just have enough reason for this one to finally break 1.09. Okay, we have enough data for that to happen. And in terms of stop loss, as simple as yesterday's low as our stop loss. That's 1.0775. At your own risk, this is not an intraday trade. This is a swing trade. We're looking at 100 pip stop loss on the Euro USD here. This is on the daily time frame. We are now projecting a move at least towards 1.01, which 1.1, which should fall at 127.2%. That's about it. And that's it. Simple as that. This is the trade on the Euro USD. It is a huge trade. 100 pip. If you're not willing to take 100 pips, do not take this trade. Even if we go for that 127.2%, take a look at the risk to reward ratio. It's basically at best 1 and 1.5. All right. So just be mindful on that one here. But I'm happy to go with the pound USD. Euro USD. I am also, I'm okay with the pound USD. All right. We'll go with the pound USD as well. Same thing, we're going to be going with the fib that we have just now on the chart, which is going to be this fib. All right, I'll leave that there. We just had that strong bounce off that. We bought about 50%. It is a lot higher than what it should have been. I think we could have a better price there, about 65. But yeah, it is what it is. I'm going to go for 127.2% here, which is at about 1.2875. All right, which is fair. It's a psychological price level. Stop loss wise, it is going to be at 1.2700. That's it. Done. This is a 1-to-1 risk reward ratio. We are looking at about 70 pips of stop loss here on the pound USD. Okay, so I like that. Aussie USD, I'm happy with Aussie USD. In terms of the take profit, I'm also happy with the take profit on that one there. Just for the sake that the Aussie USD and New Zealand USD is kind of still a wild card here. But yeah, the take profit on the Aussie USD, New Zealand USD needs to go a little bit higher. We would probably aim for a little bit of a correction to about 61.8. Yeah, that's about right, at least on the daily time frame. So this has now become a swing trade. Risk reward ratio about 1 to 2, right? About 60-40 on New Zealand USD. But yeah, have a look at the stuff here. The stop loss and the take profit level is already there on the chart. Sorry, on the platform. Have a look at it. Yeah, Aussie USD, I'll read it out to you. We bought in at 65.40. Our stop loss is going to be at 64.70, 64.72. Our take profit is going to be at 65.70. For Euro USD, we bought in at 1.0870. Our stop loss is going to be at 1.0775, which is 95 pips of stop loss. Our target price is going to be at 1.1. For the pound USD, our stop loss is at 1.27. Our take profit is going to be at 1.2875. New Zealand USD, your stop loss is going to be at 59.40. Your take profit is going to be at 60.40. What is the next step for Aussie USD? No, nothing. There's no next step. We already have the trade. Nothing much we should expect here. Aussie USD is in a range bound market condition as it is. Next week, RBA, they're probably not going to be hiking rate. Just a little bit of a warning there. Latest inflation data that we have from Australia was a little bit on the softer side. So RBA next week, they're probably not going to be hiking interest rates. So that takes away that hawkishness for the Aussie. Okay. So yeah, this is gaining. Also, if price hits 1.09, it's also a good idea to move your stop loss to break even if you want to. But I would keep it low because I'm looking at this as a swing trade. Okay. But if you're only here for today and you want to get out, you want to have a good weekend without even having to worry about all the stuff there, please get out 1.09. Okay, they're going to be profit taking at 1.09. 30 pips is more than enough. Take it out. If you don't like a swing trade, please take it out at 1.09. Okay, so Tanvi is asking about Aussie USD. So this is the current situation on the Aussie USD. It is going to be really tough. There's a lot of pressure on the Aussie USD just on the back of the weak Chinese. Sorry, no, it's not weak, but in terms of the PBOC rate cut that's been happening in China, they've been cutting the short-term interest rate really quickly in the past 2 months. Now that put a lot of pressure on the Aussie USD. You have to think about the Aussie USD as a proxy for the Chinese economy. It is the closest nation, Western nation to China, obviously, because Australia always think that they're part of Asia. They're not, but they always like to think they're part of Asia. But yeah, in terms of raw materials, I think in terms of a two-step economy in Australia, one part of the economy is in the mining industry. They do a lot of exports for raw materials to China. So if demand in China slow down, the currency will drop. Okay. So Aussie USD, we're now actually below the Ishimoku column. We are due for a little bit of a retracement, but yeah, short-term gain should happen on the Aussie USD. How far back are we looking at? We might actually go for 66 cents as a potential pullback on the Aussie USD, at least on the daily time frame. Okay. Everything else, in terms of yen crosses, just don't be tempted to think this is cheap and start buying the dollar yen, sterling yen, and euro yen. You'll be in so much pain. Trust me on this one. All right, dollar Swiss. Okay. I'll take a look at dollar Swiss on the other time frame first. Okay. Dollar Swiss also. Look, we're basically looking at reservations going on. This I do not. I will not buy dollar Swiss. If you think that you want to hold this for the long run, you want to short dollar Swiss, feel free, but do not attempt to buy dollar Swiss at this point in time. If we saw a risk aversion that happening in the market, currencies that comes to mind, the US dollar, but the problem is this is a US economy that's really bad. So people are probably not going to go to the US dollar. So it's either the Japanese yen or the Swiss franc. All right, these are safe haven currencies. And obviously gold is going to be the next thing. But, gold, it's pretty expensive. I don't like it at this point in time. But yeah, dollar Swiss right now at this point in time, in terms of how far down it'll go, it'll probably go for that low there, about 85.50. All right, 85.50 was the previous resistance before that trend reversal happened. It was also the tested support before the bounce on the dollar Swiss. This will be the next tested support. And if we go a little bit further, dollar Swiss was also previous support in July 23. So exactly about a year ago, this was the support for the dollar Swiss. So I think for the dollar Swiss, how far it can go, I'll probably go to 85.50. Does that mean, all right, so let's go short the dollar Swiss then? Well, if you get the opportunity, if you get one more pullback on the dollar Swiss, right? If you get one more pullback on the dollar Swiss, then yeah, you're probably going to be looking. We're not anticipating that pullback to happen now. We're just not looking at that happening. But if you want me to give you a little bit of a guesstimate on where we might actually get that pullback, you're probably going to be looking at about 86.75 to 87. Those are going to be the pullback area. If and only if, I don't think it's even 87. We're probably going to be looking at 86.75. Yeah, about 86.75 to 87. Yeah, pretty much about there. Right here, right? So I'm going to zoom out. And let me shift the chart. But yeah, I'll shift it back a little bit. So what happens here, you can do a buy limit order. Right? That's a good one. Okay, for the dollar Swiss, I actually don't mind having a buy limit order on the dollar Swiss. So we're expecting price to go back up there somewhere up there. And then it's probably going to push lower towards what is it that we look at? 85.50. All right, 85.50 on that one there, which is way down here. This is actually not a bad trading idea. So we got a couple of reasons to believe we're probably going to be looking at that as a potential. If you the new generation, probably look at that and say, oh yeah, well, there's a huge gap. We got a fair value gap up there. But yeah, I don't mind this at all as a trade. We'll take the consecutive enroachment for this one here, which is probably going to be at about 86.90. So we probably have a sell limit at 86.90. All right. And your stop loss for this one, it's going to be 87.25. 0.8725, and for the target level it's going to be 0.8550. All right, there we go. Simple as that. That's your trade on the dollar Swiss. You ask, you get your answer. I think for the dollar Swiss, the best way for this to happen is wait for that pullback to 86.90 and do a sell limit. All right, have your stop loss 87.25. You don't want to have a huge stop loss on this one here. Okay, because if it's strong enough to go back to 86.90 and it pushes beyond 87.25, it might actually reverse. So yeah, have a limit, sell limit 86.90, and then a stop loss at 87.25. Gold, it should be a buy. It's just that you know me for gold. I don't trust gold's price movement. In all honesty, I don't trust them. Look, wouldn't it make sense right now if we take a look at gold? FOMC is cutting rates. The employment number is so bad. It's ridiculous, right? Someone even mentioned, oh my God, just saw the NFE numbers just like when COVID happened. So I told you, only 20 years of trading. I've done more than, I've probably done close to 300 NFPs. A number close to 100,000 or as bad as this, you don't really see this happen a lot. Probably 6 is, it's an exaggeration, but we're probably going to be looking at maybe 10%, 15% at best for every NFP that I've saw in the past 22 years. This is a bad number, right? This is a shocking number. Okay, so we got a shocking number here. Gold as a safe haven asset should be going up. FOMC is cutting interest rate. It should be going up. Why then isn't gold breaking higher than that high over there? But logically, yes, I think gold should go up. I think gold should at least push up towards 2,500, 2,525, 2,550. I think it should go there. I think it should be there. But we're just not looking at the speed right now. If you want to jump in on gold, you can. Your stop loss is going to be at 2,450. All right, so if you want to go for gold, as I said, Olympics is happening right now, go for gold. If you want that, you can have a buy right now. Just make sure your stop loss is no lower than 2,450, because if it drops below 2,450, it means it will fail at the high at 2,475. It could go really bad. Okay. Current Middle East tension, potential get risk for now. Oil can still be a safe haven assets, or gold is better. I would say gold. I would say gold. Is there a safe level to buy sterling yen? No. No. I look, I'll be honest. I have not found that level, but more than happy to keep updating you guys on that on the Telegram channel. But yeah, I just don't have a number on anything yen related at this point in time. Sorry to say. Right, this is a little bit overextended, but really happy to talk about the whole situation of sterling yen. If you want to buy sterling yen, if you want to try and fade this, you can, but I don't like it, right? We got 188, we're now about 189. Where are you going to find that low on sterling yen? As I say, with the sterling yen, we're already here, right? We went past March low. The next available low is going to be at about 186 to 185. 186 to 185. All right, I know you guys are probably going to be looking at all the oscillators and say, oh, you know, this is oversold territory and whatnot. No, we don't have any oversold confirmation at all. You know, at least if we take a look at it on the daily time frame, stochastics needs to go back up above 20. RSI extremely oversold, but it still needs to go back up above 30 before we can say, oh yeah, it's oversold. So best case scenario, and I'm doing this as someone that has been trading the Japanese yen in and out every year, every day for the past 20 years. Just don't try to pick bottoms with the yen crosses, okay? If the carry trade comes back, if everyone's buying in on the yen, you know, if everyone's selling the yen again, you're not going to miss out. The range is so big, it's fine. Everyone's going to be waiting for that moment to happen, but don't be that guy that got smashed by the market because, you know, you're trying to be there early, thinking that, oh yeah, I'm going to get an extra 200, 300 pips and whatnot. Don't worry about it. And the reason why I say don't worry about it, this is the dollar yen, right? So if I were to show you the drop for the dollar yen, sorry, sterling yen, it's down 20 yen, right? What's wrong with waiting for a price to move back up above 192, for example, right? What are you gonna miss out from this current price level? 192, about 300 yen. What is 300 yen? Sorry, 3 yen versus 20 yen. It's nothing, right? So you have a lot of room. Don't worry about it. Just don't be picking bottoms. Why gold? Why with this current situation, oil doesn't spike up like before? Any issue with oil? I think we are looking at supply issues coming out in terms of OPEC decisions. That's number one. And you can take a look at oil prices right now. Isn't the tension there? Right? Shouldn't it be like up at $90 right now? Like when, you know, Iran and Israel happens and then it fizzles off. The peak was basically, you know, Israel and Iran. Simple as that. And nothing happened. Nothing can get worse than that. As simple as that. So in terms of risk premium being priced into the market, we're not looking at a lot of stuff happening. And then we have the OPEC supply output. You know, they say that they want to cut output and whatnot. What do we have in the market? We don't actually see gains in oil. So oil at this point in time, sure, it might pick up. It's just at this point in time, it's unstable. Oil is not a stable thing. It's not a stable investment. All right, it's just trying to hover around 78.6%. If it fails at 75 tonight, it might go down to 70. So just keep that in mind. I don't like buying oil at this point in time. And I know given the current situation, we're just not looking at buyers coming into the market. Right. By logic, we have geopolitical tension. It should be there, all right? But it's not. If you've got output, supply output being reduced, it should push oil prices up. But we're not looking at that either. So something doesn't click. Okay, and the futures contract for oil, we're still expecting a lower price coming for oil in the near future. So yeah, look, it's not pretty. So yeah, you know, why is it different? I don't know. I think there's just a lot of risk premium being priced into oil, and then everything fizzles out, right? As I say, you know, market is not a kind place, and I don't want to be a hypocrite about it. Traders like war, right? Stuff like wars like that, you think traders are just going to say, oh, this is bad? No, they're going to look at that and say, I'm going to make a lot of money out of that. As simple as that. But we see nothing. It fizzles out. All right? Demand for oil at this point in time, we're just not looking at that. Oversupply for oils, yeah, maybe here and there, but in all honesty, it should be up there logically. But we're just not looking at the demand at this point in time. Okay? All right, cool. So going back, yeah, we got everything. I think this is starting to calm down a little bit, right? Gold's coming down. If you had opened that gold position, you're probably going to be stopped out soon. Euro USD, it's okay. I think this is the better performer. Pound USD is also a good performing. Aussie USD, unfortunately, doesn't go anywhere. So we're stuck with that position at this point in time. It is what it is. Okay? All right, cool. So yeah, just be mindful with gold. You know, if things are this bad and there's a run to safe haven, and if gold was it, should be beating all the other currencies right now. We're just not looking at that. Demand is waiting for gold, and one of the main reasons for that is gold is super expensive to own right now. Simple as that. If I can get it at a cheaper price, I would get it at a cheaper price. I don't like this price. Okay. All right. So that's pretty much it. We just did some post NFP trading. I don't need to explain that. But yeah, you know, a couple of tips in mind. Manage your risk. Always number one, stay informed, be flexible. Things change. You also need to figure it out. I know with the trading strategy, typically you do not want to tweak your trades, but data like NFP, we need to look at the data. We need to look at how the market reacts to it. This is very important. Okay. All right. So this is the code again. It's Nonfarm 2024. Feel free to use this code to double your deposit bonus, valid until the 31st of December 2024. Code again is Nonfarm 2024. And I don't think we have time for Q&A session, so I'm gonna go next with our theory and practice. So we actually did a lot today. All right. There's a reason why we avoid the buy sell order. We'll wait until we get a much better price on the Euro USD and upon USD, and we'll buy it back in, right? But we avoid straddle strategy for a very particular reason. And that's going to be explained next week on Friday. If you never attended, please attend it. Right? How are you going to trade without the theories and the logic behind those trades? And then we use the limit order as well. You know, this is one of the rare cases we actually get to use limit order on a live trade on dollar Swiss. But I like that trade. The risk is small on that one trade there. All right, so advantages and disadvantages of niche trading. I'm going to explain that next week on Friday. Most profitable niche trading. One of them is actually today. Niche trading and price action, very important. We need the market, we need to understand what phases the market is in. What do we need before the straddle strategy is actually going to be a high probability strategy, what to avoid and what not, okay? So we'll also cover that deeply with the buy stop, sell stop strategy, when to use it, when to not to use it, when to use sell limit strategy as well, okay? All right, guys. Where's a good stop loss? Mine is 24.85. What, to sell it? To buy for gold? Yeah, 24.85 is okay. I wouldn't go that far, I'll be honest with you. But yeah, if it goes beyond 24.75, it'll trigger 24.85 anyway, because I think there's a lot of stops line up at 24.80. It's probably going to trigger that. All right, guys, let's wrap it up for tonight. Good luck with your trades, and I'll see you next week on Friday. Have fun, stay safe.